let's say that a bank that made very poor choices in the past few years, it got all into all these derivatives it really could not afford because it thought real estate prices will keep rising for forever, and it gave out loans to people that really could not afford repayment, right? But the bank is too big to be allowed to go bust and bankrupt. So in order to preserve this bank, what the Bush administration did is they decided to aid it and give it money at a very low rate of 0 to 0.5%. Now, the bank takes this money essentially for free, but in order to prevent inflation, which was the agreement between the administration and the banks couldn't just use that money directly. What they did, they purchased treasuries in return for their bad assets. If I'm not mistaken, at the time the interest rate on treasuries was 3.5%. Do the math yourself. You lend me money for 0.5%. I lend it back. I lend it back to you for 3.5%. I get to keep 3% on the money you lent me and not do absolutely anything. Well, that's a good idea for the bank, but it doesn't solve anything for the consumer because it doesn't ease lending standards. There's still deflation out there, people. So when Obama came into office, he said, well, this is not working. We got to find another way to make banks feel confident and to get them to lend. So he decided to offer the banks liquidity by propping up the prices of their stocks. And this, in turn, made the banks begin to sell the treasuries that they previously had. And those of you watching the treasury market, those of you that have seen it in the past weeks and before know that this is not a good thing, because all of these treasuries coming online and increasing supply, what it does, it brings down the price of treasuries and it has to increase the yield. And because so many mortgages, student loans, other mortgages with alternative rates are tied to this yield, if the yield increases on the treasuries, the mortgage payments increase, and right now the people cannot afford it. There's a lot of unemployed, there's a lot of poor people, and if this happens, they're going to start defaulting. So the Fed has to do something about it. And what does the Fed do? Well, the Fed got this little trick up its sleeve. You see, it's called quantitative easing. Now, what quantitative easing really means is that the Fed creates a bunch of money out of nothing by printing it, and then goes ahead itself and buys up a bunch of treasuries, shifting the balance between supply and demand in favor of demand and pushing the interest rates down. Well, it could work in theory, except for one little thing. Well, before the Fed came up with this policy, who was the biggest buyer of treasuries? I know, it was all those foreigners, the Chinese or, the Europeans, something like that, I think. Unfortunately, it turns out they're not stupid. So, when this happened, they said, wait a second, this is inflationary. If I keep my money in treasuries at this low rate while they're printing it, my money could potentially not be worth anything. So they started cashing out of their long-term treasuries. And now for every treasury that the Fed purchased, in order to keep the rates low, the Fed had to purchase more treasuries. Well, whatever. The Fed has the printing press. Why should it care? It can print all the money the treasuries could possibly need. And what will happen then? Oh, that's right. So the Fed will own all the treasuries and a big stake in the stock market. What is this likely to do? Well, probably this is likely to make foreign nations with their much less favorably bias towards the United States policy news media freak out about the dollar and dump the dollar and purchase other currencies that will be seen as more stable and commodities. As a matter of fact, this has already been happening. Russia's purchasing euros, Iran's purchasing gold. There's plenty of other examples. But why is this bad for the United States? Well, most of the things in the United States are imports. They're not things produced in the United States. So now, if other nations dump the dollar, imports for the United States start becoming more expensive. And to make things worse, some of the dollars from abroad that were dumped will be rushing back into the United States, increasing the supply of money. Now, the US, during this transition to a sustainable economy, which now it will absolutely have to do, will need to use much more expensive resources in order to get there. And the more it prints, the more expensive those resources will become. So it's essentially like a catch-22. And it is quite possible that in the short run, it simply will not be able to get enough resources to transition to a self-sustainable economy. What will this lead to? Well, two options, right? One, resource wars. Another, Iraq. Maybe in Iran. Maybe something worse than that. There is another option, though, and it's probably better than resource wars. And the other option, however, includes that businesses, flush with money from their stock investments, from the government, now can get a hold of inventory they need to produce the output that they do. So what happens as a result of this? Well, businesses are going bust. Their stocks may be doing fine, but they're going bust because they can't actually produce anything. As a result of this going bust, businesses are laying off workers. Laid off workers are deflationary for the economy because they're not making any income, because they cannot afford anything. Now, I know you can say, well, the government can still print up money and send unemployment benefits and Social Security. Oh, but I don't think that after all that this is going to happen, or that this is going to be allowed by the public. This time the public will be more aware, so where does it leave us? My conclusion is that deflation will prevail in the stock markets. And the only question is whether it will be preceded by a period of hyperinflation, and if it is, whether the stock markets will survive the way that we know them. Now, personally, I think that this rally was most likely dwindle once the banks are flush with capital again, because I simply cannot fathom that a nation that's been a leader of the world for so many decades has a government that doesn't understand that you can't simply print up money in order to solve the problem. I think that this is just being sold to those people watching the television, and the downwards pressure will resume very soon. But keep in mind that while I say that deflation will be happening in the stock markets, this is not what I think will be happening in the commodity markets. Thank you.